You're watching Dukascopy TV. I'm Elaine Stenson. At the October 31st policy meeting, the Bank of Japan said that risks to the economic outlook were roughly balanced and Japan was making steady progress towards achieving its 2% inflation target in roughly 2 years. But minutes of the meeting showed a rift among the 9 board members on the inflation target, with pessimists doubting whether firms would boost capital expenditure and regular pay quickly enough. It was the biggest rift on the board since aggressive monetary stimulus was launched last April to reach the inflation target. I'm joined on the line now by Hardman from the Bank of Tokyo-Mitsubishi UFJ in London. Lee, the Japanese central bank has a 2% inflation target in early fiscal 2015 through an aggressive easing policy that is supposed to work in combination with government economic reforms. Governor Kuroda said the Bank of Japan was on its way to meeting this target. Do you think that this is happening at a slower pace than expected?
Our view is that we have a similar view to the Bank of Japan, that so far we think inflation developments are occurring broadly in line with their forecasts. More recently, there's been positive developments on the inflation front. The US-style core annual inflation rate moved out of negative territory for the first time since December 2008, and there's clearly an underlying trend for higher inflation. So we're generally positive that we're seeing a tentative end to deflation in Japan at this point in time.
There was a repeated call for greater price target flexibility. Do you think that this is warranted, or could a target change send the wrong message?
Well, I think, some members are concerned that the BoJ's inflation target to reach 2% within the next 2 years may be too aggressive. And certainly we would share some concern that it is a very ambitious target. If you look at the performance of inflation in Japan, historically, it hasn't really been since the early 1990s when Japan has been able to see sustained rates of inflation of around 2%. So certainly from that perspective, it's a very ambitious target. But on the other hand, the BoJ wants to send a clear message to both market participants and to households and businesses in Japan that it's serious about raising inflation to try and help lift inflation expectations.
The US dollar snapped a 3-day advance against the Japanese yen today after the minutes of Bank of Japan's policy meeting revealed that some policymakers saw greater downside risk to the nation's economy, while the majority saw a balanced risk. Lee, it is likely there will be further gains in the dollar-yen, but do you think it will be a slow grind, or are you expecting a dramatic move higher?
We think that going forward, the gains in dollar-yen are likely to remain more gradual. Certainly the move we saw earlier this year in dollar-yen was certainly a lot more significant in scale, and we think that was a large part of the adjustment taking place. Going forward, we think the move will be smaller. Certainly, we still think that there's scope for further upside, though. Do we think that next year the US economy will strengthen as the fiscal drag eases, and the Fed will begin to taper QE and eventually bring QE to an end by the end of next year, and that should be supportive for the dollar relative to the yen. And at the same time, we think the BoJ may start to become more concerned over the downside risks to its inflation and growth targets next year, which may prompt the BoJ to consider further monetary easing around the second quarter of next year. So from that perspective, potential policy options could be to extend their current planned purchase program into 2015. Or potentially making it more open-ended, with suggesting to the market that they could continue asset purchases until the inflation target is in sight.
Some Bank of Japan board members sought last month to water down the central bank's inflation target because of concerns about risks such as slow rises in business investment and wages that clouded the outlook. But one board member argues that the downside risk to weaker prices are somewhat higher than the upside. Do you agree with this?
I think what we've seen so far this year is that Abenomics policies have helped to boost corporate earnings in Japan, and we'd agree with the BoJ that we're relatively optimistic that the higher corporate earnings will feed through to higher earnings for Japanese households, which should help to support consumption growth going forward. But clearly a key test of that optimistic scenario will be the wage negotiations next year in Japan. As some of the BoJ members noted in today's minutes, they are slightly concerned that the corporate earnings growth will not be translated into higher base wages, which would help to keep a sustained rise in wages going forward.
Lee, many thanks for joining me on the line today, and that's all from me for now, but do check back for further exclusive interviews and updates throughout the week. Bye for now.